Welcome, dear traders. Contrary to expectations, yesterday US inflation data failed to meet forecast and caused high volatility in the market. Today's data on China's trade balance supported the Asia-Pacific currencies and reinforced hopes for recovery and a global trade. However, the data on China cannot be called very positive. The country's economy still remains in the deflation zone. That's a decline in prices, production, and demand. According to current data, consumer and manufacturing inflation fell by 0.3 and 2.7% respectively. On the other hand, China recorded a trade surplus on the back of steady exports. This indicator grew for the second consecutive month and increased by 2.3% in December, given that China's exports fell by 4.6% in 2023 and declined for the first time since 2016 due to the weakening global demand. It seems that the reverse has begun. However, the economic recovery is very fragile in China. The crisis in the real estate sector, which started last year, has spilled over to financial companies. The measures taken by the country's authorities to support the economy are still insufficient. China is likely to cut interest rates in the first half of this year in the face of a persistent deflation, and the US Federal Reserve has another problem: stubborn inflation. And yesterday's reports showed that consumer prices unexpectedly rose at an annualized rate of 3.4% in December. With last Friday's better than expected US employment data, the Fed has an opportunity to keep interest rates high. Nevertheless, according to the FedWatch tool, over 66% of traders see the probability of a rate cut as early as in March. The data on the US producer inflation should provide more clarity for the Fed's future decisions. The data will be released today, and it's likely to send the US dollar on another roller coaster ride. As can be seen on the chart, the greenback rallied above the 102.70 mark yesterday. The US currency index then corrected against its six counterparts almost to its previous pre-rally level. And today in Asia, it was trading within the sideways range of 102.10 and 102.30, maintaining a downtrend. In addition, market optimism about the Fed's March rate cut kept US Treasury yields low. Nevertheless, the US dollar is poised for potential gains today. If the inflation reports come in higher than forecasts, the greenback could repeat yesterday's high of 102.76 and consolidate in a high range. Notably, the US dollar index remains well above the 5-month low of 100.60 reached in December. That's when the markets began to aggressively price in the level and number of the US interest rate cuts. Now it looks like those prospects will be postponed to a later date. Moreover, Fed representatives retailed the same story. Chicago Fed President Austan believes that inflation has not made enough progress. On Thursday, Cleveland Fed President Loretta Mester said that the central bank would probably cut rates in March. In addition, Tom Barkin of Richmond Fed noted that inflation should reach a sustainable 2% for a rate cut. Against the backdrop of the Bank of Japan's inaction to change negative interest rates, the country's currency is fully dependent on the movement of its counterparts. Thus, yesterday's outburst of volatility of the US dollar pushed the dollar-yen pair to the area of 146.40. In the same way, together will the fall of the greenback moved in the boundaries of 144.80 and 143.40. The yen began the Asian session near the psychological level of 145.5. As the technical indicators for the pair remains in a negative territory, bears will try to push the price down to the support area of 144.10 and 144.00. On the other hand, a breach of 146 could expand the pulse range of the auction and allow them to target the 147 level. The antipoding currencies also reached the highs and lows over the past 24 hours. The Australian dollar began the Asian session with a rebound after a sharp decline on the back of the US economic data. As a result, the Aussie climbed above 0.67 and held gains in the range of 0.6680 and 0.6720. It also found support from a rise in oil prices as well as other commodity currencies. In Australia, economic reports are given mixed signals. For example, retail sales rose in November, while goods imports fell to 9 months low in December. Therefore, the future movement of the Aussie dollar pair will be determined by the US dollar quotes. The development of today's events does not exclude further growth of the Aussie toward the key resistance at 0.6750. On the contrary, the Aussie may return to the key technical support at 0.6650. Approximately the same picture emerges today on the chart of the New Zealand pair. The price of the kiwi began the Asian session on the rise within the daily range of 0.6230 and 0.6260. In addition, China's 1.6% annualized growth in the RMB import is also in a positive for the New Zealand currency. Given the close trade relations between China and the antipodian countries, this factor increases the attractiveness of the Australian and the New Zealand dollars as a liquid proxies for the Chinese yuan. The Indian rupee continued to strengthen against the US dollar today after a long period of flat trading. The rupee fell to 82.9 from 83.1 early Friday. However, the rupee as well as other Asian currencies looks unstable today. They are likely to face a turbulent closure of the trading week, and the euro-rupee pair has also been trading moderately lower in the 91 and 90.83 range since the beginning of January. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you soon.